So it's absolutely crazy what is currently happening to Senseonics stock again, actually being down more than 1.6% while sitting just above the $3 mark and still pulling back from the second spikes, marking some incredible 150% jumps in price. So what we are going to do today is give you an updated insight into what is happening to Senseonics stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so let's start talking about the stock. And in the case of Senseonics, we are actually looking at one of the leading producers of glucose monitoring systems or CGMs, making the measuring process much easier for people with diabetes. But despite the pretty high growth business model of the company, which we'll take a look at in a second, the actual reason for the incredible gains recently were caused by a completely different thing: some massive hype amongst investors. In fact, this astonishing hype made the stock skyrocket more than 1,500% at the beginning of the year, in addition to the recent 150% recoveries we've seen from the then happened pullbacks again. But what actually enabled all of this to happen are the perfect conditions the stock had before breaking out. Its short interest of more than 25%, for example, enabled the short squeeze, while the single-digit price and relatively small float of just 280 million shares at that time literally made Senseonics stock comparable to most meme stocks that gapped up some incredible amounts recently. It's the business model of the company, however, that makes it so much more interesting, especially to investors. And next to the incredible progress Senseonics made in regard to the commercialization of its product line in the literally multi-billion-dollar diabetes space, there's one thing in particular that truly differentiates the company from its competitors: the Senseonics Eversense XL product. But as said before, and this is crucial to consider for our prediction at the end of this video, these devices haven't only received a lot of attention from investors. In fact, another major name in the global diabetic care market, called Essentia, has just partnered up with Senseonics. And in their agreement, they actually planned the distribution of the Eversense XL product in Europe, opening a massive new space to expand in with incredible potential and opportunities. Additionally, Essentia already has a ton of experience in the field, which is especially helpful to establish the brand in Europe, while Senseonics, on the other hand, has some huge advantages over the other competitors in the US. The Eversense XL actually is the first long-term implantable glucose monitoring system, being able to remain in place for more than 3 months, an astonishing improvement over the usual 14 days period. But this isn't the only thing that seems really appealing at the company. Taking a look at the financials, it's actually moving in a pretty good direction as well. It, for example, generated revenues of almost $3 million, which equals an insane gain of more than 7,000% on a year-over-year basis. And considering the cash positions at almost $200 million and indebtedness at just $110 million, the revenue estimates of the company at around $15 million are making a lot of sense. So taking everything into account, Senseonics definitely has huge growth ahead, especially in the super fast-growing diabetes sector. You need to consider, however, that there are still some execution risks with the stock. While investors have to see a continuation of the current growth to justify the recent jumps in price, they've also brought a lot of volatility with them. But up to now, and we said that before, the stock has certainly been moving. Additionally, we got a really solid product line, being able to lead the global diabetic care market with some unique features which give it the edge over its competition. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.